If something happened to you today, do you know the person, people, or third party your life insurance, your 401k, or your IRA would actually go to? And this has nothing to do with your will. It's not what you assume. I'm talking about the name written on a beneficiary form, because that name and only that name decides who gets the money. I've seen life insurance payouts go to an ex-spouse instead of a current spouse, and something like that gets ugly quick. I've seen retirement accounts pass to parents instead of children. Not because of bad luck, but because nobody updated one simple form. Stay with me until the end, because I'm going to show you how a 10-minute beneficiary review can prevent one of the most expensive mistakes a family can make. So let's get started. Let's start with the part most people get wrong. Many people believe their will decides who receives their life insurance or retirement money. It doesn't. Life insurance policies, 401ks, IRAs, pensions, and annuities are what's called contract-based assets. That means they pass directly to whoever is named on the beneficiary form, regardless of what your will says. If your will names your children, but your policy still lists an ex-spouse, the insurance company follows the policy. Your will has no say in that decision. This applies to anyone who owns a life insurance policy, has a retirement account through work, or has an IRA, a pension, or an annuity. In other words, it applies to almost everyone watching this video. Now that we understand why this form carries so much weight, let's look at how it's actually structured, because there's more to it than just one name. Let's start with this. Every policy designation has two parts, and most people only think about the first one. The two designations are primary and contingent beneficiaries. First is the primary. This is the person or people who receive the money first. Then there is the contingent. This is the person who receives the money if the primary is no longer living when the claim is paid. Here's why that second part matters, just as much as the first. I've reviewed policies where the primary beneficiary had already passed away years earlier and no contingent was ever listed. When that happens, the money doesn't automatically go to the next of kin, the way people assume. In many cases, it ends up going through probate, which means court involvement, delays, and legal costs that could have been avoided entirely. See, a complete beneficiary review isn't just about updating one name. It's about making sure both the primary and the contingent reflect your actual wishes today. Now that you understand the structure, let's talk about the moments in life when these forms quietly become outdated. Beneficiary forms don't update themselves. They sit exactly as they were written until someone changes them, and life moves faster than most people realize. A few common life events create risk almost immediately. Getting married and not updating a policy that still lists a parent or a previous partner. Getting divorced and forgetting that an ex-spouse is still listed as primary. Having a child and never adding them as a contingent beneficiary. Losing a spouse or a parent who was named on the policy and never replacing that name. Starting a business and never reviewing how a policy tied to a buy-sell agreement is structured. Each of these events feels personal, not financial. So insurance paperwork is usually the last thing on anyone's mind. But the policy doesn't know that life changed. It only knows what's written on the form. Let me share a situation that illustrates exactly why this matters. I worked with a client who had been divorced for several years. He had since remarried and had a young daughter with his new wife. During a routine review, we pulled up his life insurance policy, and his ex-spouse was still listed as the primary beneficiary. He had no idea. He assumed that once the divorce was final, the policy had automatically updated. This is definitely not an automatic trigger. In the worst case, if something had happened to him before that review, the death benefit would have gone to his ex-spouse and not his current wife and daughter. In the end, there would have been nothing anyone could have done about it after the fact. However, we corrected the situation that same day. It took less than 10 minutes. But if we hadn't caught it, this would have created a financial and emotional situation that money can't fix after the claim is already paid. Here's what I want you to actually act on, because this genuinely takes very little time. Step 1, make a list of every account that has a beneficiary attached. That includes life insurance policies, your employer's 401k or 403b, IRAs, pensions, and any annuities. Step 2, for each one, confirm who is listed as primary and who is listed as contingent. Step 3, ask yourself if that still matches your life today. Step 4, if you have minor children, understand that most companies will not pay a death benefit directly to a minor. In many cases, that money needs to be directed into a trust or handled through a custodian. So this is worth structuring correctly ahead of time, not after a claim. Step 5, don't forget old employer retirement accounts from previous jobs. Those are some of the most commonly overlooked because people simply forget they still exist. And step 6, make this an annual habit, not a one-time task, because life doesn't stop changing after you do this once. Here's the main point I want you to take with you. A beneficiary form is one of the most powerful documents in your financial life, and most people have never actually looked at it since the day they signed it. It doesn't matter how good your will is, how much coverage you have, or how well-intentioned your planning was years ago? If the names on that form don't match your life today, the money may not go where you intended. The good news is this isn't complicated to fix. It's 10 minutes, a few phone calls, or a quick login, and a level of clarity that protects the people who depend on you. Don't wait for a life event to force this conversation. Review it now while you have the time and the choice to get it right. Now, if this content was helpful, place a thumbs up in the comment section. This really helps with engagement and assists with pushing out this video to others. Also, word of mouth is good too. So please share this content with someone who may benefit from this topic. Then check out my video library. I have information on home, auto, business, specialty insurance, and retirement. With all this being said, subscribe to my channel and help me get to 1,000 subscribers. But don't stop here. Check out my next video for more insurance and financial tips. And as I like to say, call Jay today.